Cost of living crisis is affecting everyone, regardless of wealth. Outgoings are increasing, and only a few can honestly say that they're not worried. So you need to address this now and make sure you're in the right position to deal with your mortgage now and in the future. Hi, I'm Jenny from Your Mortgage Hub, and I'm here to help those starting out or starting over with their mortgage by showing you what you should and shouldn't be doing when it comes to applying for a mortgage. So there's no getting away. No one can hide from it. There is a cost of living crisis happening at the moment. And when people's mortgages are coming to the end, if we've not looked after our finances and we've not considered that, we could see ourselves paying a higher interest rate than we need to. Energy is increasing for many, and again we're going to be hit in November, so we kind of need to tackle this head on and deal with it straight away. So most households outgoings are going up, and if I'm honest, when it comes to your mortgage payment, the likelihood is that's probably going to go up too when it comes for a remortgage. So let's put some things into place now, so when that happens we are fully prepared. So here are my 5 top tips that I think everyone should be doing in preparation for when their mortgage gets renewed. Number 1, if you're struggling with your mortgage payment or actually any payment, don't just not pay it. You need to pick up the phone and you need to speak to your provider or your lender. Have a conversation with them. They really want to help people in this situation. But if you just leave the direct debit to return, not only is that going to create arrears, it's going to create return direct debits, and it can impact on your credit file. So have the conversations early on. Number 2, look through your bank statements. There's loads of little pesky direct debits, or there might be some pesky direct debits that you're paying for that you don't need anymore, such as that laptop insurance, for example, or that mobile phone that you don't even have or you don't warrant it. Have a look. Is there anything on there that you're paying for that you don't need to? Get it cancelled. Again, don't just cancel the direct debit. Pick up the phone to the provider, have a conversation and get them to cancel it from their end, and then you can cancel it from your end. Have a look at what your home insurance covers, okay? You'll be surprised at how many little bits it can cover. It may be that you're paying for 2 insurances when actually it's all covered by your home insurance. Or it may be when your home insurance comes up for renewal, it's better to pay that a little bit more each month because you can cancel 2 or 3 other insurances on the back of it. So it makes it more cost effective over the full sort of householding outgoings for you. Number 4. Don't let your credit file suffer. If you let your credit file suffer when it comes to getting your remortgage, your rates are going to increase. I know it can be really hard, but you have to sort of face this head on. Any default CCJ or missed payments, especially when they're to do with your mortgage, is really going to start to impact on your mortgage rates. So have that conversation with the providers and the lenders up front, and try to protect your credit file when needed. If you need if you need a credit file link, let me know in the comments and I'll send you one over. And number 5, the most important one is review your mortgage, but don't review it when it's just coming up. You need to 6 months before your mortgage comes to an end. You need to be getting in contact with your mortgage broker and asking them what rates they can give you. You're looking at the whole of market mortgage advisors because we can search all of the market, not just your current lender or a handful. Have that conversation before, 6 months before your product comes to an end. They can secure the rates early, meaning you're going to get the lower rates on the market rather than waiting. So to recap, the 5 things that I think everyone should be doing to secure their mortgage for now and in the future is, if you're struggling to make any payments, contact your lender straight away. 2, have a look through your bank statements. Is there anything you're paying for that you don't need anymore? Number 3, check what your home insurance covers. You might be paying for a separate cover and it's actually covered by your home insurance. Number 4, don't let your credit file suffer. I promise you, if you do, you're going to be paying higher rates in the future. And number 5, when your mortgage product is coming to an end, review it 6 months before it's due to end. That way we can secure you the lower rates then, rather than waiting the 6 months. So guys, let me know what you're doing to manage your finances in the comments below. If you want any more hints and tips on what you should be doing or you shouldn't be doing when it comes to applying for a mortgage, just go check out my page.